Good morning, everyone, and welcome to your Daily Five. I'm Leslie Jouflas of Trading Live Online, and I'd like to thank StockCharts for inviting me back again. This is the segment where we have about 10 minutes to present about five charts. Today, I thought I would look at the indexes again. It's been a little over a month. I think May 19th, Daily 5 was the last time I updated it for you guys. So I thought it was probably time to take a look. And we're going to look back. We're going to start with looking back 100 years, and then we're going to bring it current and look at the SPX, the Dow Jones Industrials, and the NASDAQ. And let's take a look and see where they're likely headed. One thing I'd like to tell you about before we get started, if you're interested, on Thursday, June 21st is coming Thursday at noon Eastern Time, 9 a.m. Pacific Time. I'm going to do a webinar presentation on day trading the S&P 500 futures. So if you'd like to join me for that, please just type this long URL into your browser and sign up. And you'll also receive a free PDF on the classic AB Gold CD trading pattern for ranges and trends. And that's going to show you about some of the pattern recognition that I use. Okay, well, let's get started now on some of the charts. So I came across this chart a few days ago, and you can find this in StockCharts. And all I did was I put this onto a yearly choice. And so each bar is 1 year. And we're looking back all the way back to the year 1900, the beginning of this chart. So, of course, we can see a lot of historical data on this. What's really interesting, though, if I sort of didn't tell you, how far back we're looking, and I could have said this is intraday chart. It's interesting because the same types of swings and patterns are still occurring 100 years later. Now I've drawn in some parallel trend channels here, and I've put a center line in, and you can see how the prices have reacted around that center line. This is the 2009 drop here. You can see that it closed just above that center line. Well, I think one thing to really keep as a takeaway from this is as the market does tend to trend upward. Of course, we get corrections to the downside. And even this period back here, in the early to mid 1960s, went into a very long sideways range with some drops, some kind of big drops in it. And it didn't actually start to get to new highs until the early to mid 1980s. So that's close to a 20-year period of the market on this particular time frame. Of course, there were lots of trends on different time frames, but on this particular one, it was really in a sideways range with some downward bias to it. So we want to hope that that's not what we're going to be seeing in the future. But just looking at what is current on this particular chart, this is a yearly. So of course this bar is not closed. It still has another half year before this bar is going to close. But, let's just say it did close as an engulfing type of a pattern on here. I think watching some of these areas, here's a hammer pattern here. These lows would be, uh, pretty strong support that'd be coming back around where that center trend line is. You can see some of these areas where the market, like right here, came to the upside, continued the uptrend. Same with right here. Back here, we've got some, that would be a pretty deep correction here. But if the market did come all the way back to this point, if we did a horizontal line back here, again, that would be coming pretty close to that upward trend line. So from time to time, we'll check back on this chart. But for now, let's take a look at some of the current charts. All right, let's start with the Dow Jones Industrials. I'm going to use the YM contract. That's the mini for the Dow Jones Industrials. And we can see that it did get down to this 0.382. Now, I pointed that out in previous videos, and so you might want to go back and check those if you're new to this analysis. But that 382 was also corresponding with, you can see where that previous upside breakout was, and is finding some support there. However, I think we may just be getting a bounce to the upside, not a reversal yet. I think there's still likely some more downside to come in the indexes. Uh, so I think I'd be looking at break of the 382 level. I would be looking around this 0.50 retracement. These retracements, I'm using the March 2020 lows to the highs. Notice on this last bounce off of this ABCD buy pattern, notice the retracement to the upside got right back up into that really wall of resistance. I think for the Dow to really make headway to the upside, it's got to break that resistance area. There's still going to be some more resistance to the upside, but this is really the first major one right now that I'm seeing that it would need to reverse and close above. On this chart, now we're looking at the INDU on the daily chart. So we've just scaled down a time frame to the daily, and we can see a little more detail with that ABCD buy, the retracement that went right into that resistance. You can see the sideways range that formed, just a continuation pattern, and then lots of gaps to the downside. So the RSI, the MACD, these are, this is still turning to the downside, still in bearish zone. The MACD is showing some pretty heavy momentum lows. So if we do get a rally soon to the upside, then the MACD just may start to correct back up towards that zero line. And the RSI may also correct back up around possibly these peaks here or even over here. So we will keep an eye on that. This little area right here is an extension of this swing and this swing. So if we get another little dip down without breaking that, then we might see a bit of a movement to the upside. But I think that the rallies still to the upside are going to be limited, and we're likely to see some of these bigger retracements happen. Now, looking at the NASDAQ on a weekly chart, we just looked at the Dow. We could see that the Dow is retraced just to the 382, where the NASDAQ has traded to and below this 0.50. It's a lot on this weekly chart. There's a lot of resistance up here in this area. A lot of times when you see these long types of candles here, sometimes watching around that halfway point of a candle like that for resistance, or even right up here at the open, I'd be monitoring the market with any rally back up into that area and be looking at some of your momentum indicators to see if they're showing that there's real strength to it, or you're starting to see some sell divergences, and possibly that might be a warning that the market's ready to roll over again. And again, we'll be watching this 618 on the NASDAQ as the next level if it starts to roll over and exceeds these lows. If we look at this SPX on the monthly chart, now remember the Dow has retraced the 382 and the NASDAQ has traced below the 0.50, and the SPX looks like it's heading down to at least that 0.50. Again, we might see a bit of a rally to the upside, but I'm going to show you an intraday chart of the S&P 500 futures, and I'll show you where I'm seeing a lot of resistance areas to monitor on the upside. All right, so this is a 60-minute chart of the S&P 500 futures, and I do not have Globex data on this on my charts. On the regular bar charts, I do not put Globex on. When I'm using tick charts, then I do put Globex on those so I can see all the swings. But when I leave the Globex out, then I can see where a lot of the big gap areas are. I can more clearly see some highs and lows of the swings. So that's why I do it that way. So back here, there was a big sideways range that formed for several trading days, and it really coiled up. And you can see the center line of a previous range over here, and just about the high of that uh, was tested, which was the underside of that center line, and then a break through that, a very solid, decisive break through that support level, and large gap down, a large gap down. And we can see here we had a gap to the upside. This was the FOMC day. Now, these levels are important right now because generally, when you have a spike high and low from the FOMC days, those can act as support and resistance areas. So this low has already been broken. Um, However, we can see this little trend line here. And so the market has more room to retrace to the upside, but it's still hitting resistance on the way up. Right here is where the gap closed. I'm going to put a big circle here where this full gap is. So if the market does start to get a stronger rally to the upside, I would be watching, first of all, around the center range of this candle here. And if it were to climb higher, then I would be watching where the gap close is around that 37.90-ish area up there. And then, of course, above that, we have about 38, right around 38.40 or so. So you can see even here, these lows here, resistance, um, the market on the FOMC day started to rise above that, but it failed. And then it totally reversed and trended down during the Globex session, causing this large gap to the downside. So right now, these support levels around this 38 level, that's an important level to be watching. If that breaks decisively, then those levels below that I just showed you on the longer time frames, I believe will probably come into play. I think another level to watch for support before that occurs is right around the middle of this range here. So this is the most recent range that's formed. You can see the RSI created a little bit of a bullish divergence on that, but it's still an uptrend within the higher time frame downtrends. The daily, the weekly charts, the monthly charts are still in downtrends right now. So I'd really be watching these resistance areas. And then here, I think a break below that 3670, 3650-ish area. And it'll be heading down to these lows. If it breaks those lows, then be watching those levels from the longer term retracements below. Well, that's it for me today. I hope you join me for the webinar this week. If you have any questions, my email is on the first slide. Feel free to send me an email, and I'll see you on the next Your Daily 5. Have a great day, everyone.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.